Hey everybody, Kemosabe here. Figured I'd give my input of what I can on MicroStrategy. Had one heck of a run since 2003, since it rebounded from the dot-com bubble. But look at the volume on here. There's some volume interest here, but not much, but it was a nice rebound. But the volume interest really came into play in, what is that, May or something like that of 2020, when Michael Saylor Moon decided to buy Bitcoin. And now there's a lot of interest. That definitely sparked a lot of interest in the stock. He really likes the stock, just like a roaring kitty. So is this thing done? Is it done running, or does it still have more to go? I can make an argument both ways. But I'm just matching the patterns here, what I'm seeing, matching that leg with that leg, little ABC in the middle, matching this leg down, this leg down, and then this leg here matching this leg. And if you measure them all out, they all look like they match pretty well. Everything looks complete, and you took out that liquidity. But that is a 2-week chart, so it is very, very large time frame, but let's just measure those legs the way I was matching them. So I want to measure this leg down and match it with this leg down. See if it matches appropriately. That's a little questionable, but it did not close beyond the 1618, so it's a stretch, but it does match. And then we'll match the first leg with the current leg. So matching this one and projecting from this low right here, you hit the 1-to-1 fib extension. Now this all is in log scale, but that's how I'm matching the pattern for now. We can get all the way up to 1045. It's still valid anywhere in this pocket, the way that I look at it. So yeah, it could keep pushing. It is still in an uptrend. So there isn't a real cause for concern other than a big volume spike that you're seeing there. It's a big volume spike. Now we'll zoom it into the current rally on the 1-week chart. You're seeing volume spiking as prices pushing up into this area, consolidation, and now you have a very, very large volume spike. The volume spike is coming at the high, not on the breakout. A little bit concerning. You do have a gap in the chart right there. But let's take a measurement from the very lows here, measuring to the high. Wrong one. Trend-based fib extension tool from the low to that high and project from the low, perfectly tagging the 618 extension. Now that is an Elliott wave thing where you have waves 1 plus 3 projected from 4 gives you the target for wave 5 at the 618. So that could be a completed move as per Elliott wave, but it's still in an uptrend, so it's trending up. So to further confirm some Elliott wave things, we'll bring out the RSI, which you are showing a divergence building on the RSI. I'd like to see some local bearish divergence playing on that before deciding to short sell it, but with that volume wick, it pushed up into that area and rejected off of it on volume at a wave 5 target. So that is something to definitely be concerned about. Zooming into the daily chart, you do have that divergence. It's more of an exaggerated divergence. RSI is coming down, not oversold, but it should support at the 50 for another bounce up, most likely. And you can make an argument for that. But it is starting its divergence. But it has to make a lower low close before you can get a lower high, most likely. Let's measure some things here. I mean, glaring at me on this daily chart is matching that with that. Those look like they'd match pretty well. So from there, maybe you get this leg down, fill that gap. And this center looks perfect. Perfect ABC there. And the way that this pops here and pulls back, pops here, pulls back, and then rips, that looks perfect median. So if I was to buy this, I would buy this leg down right there and try to trade it up for the rest of these moves if it wants to go. So to get that leg, let's measure how tall it is. This is in log scale again. So I'll measure how tall that is projected from the high. And we'll look for where the 1-to-1 sits. And this is what gives me my trade set the way that I look at it. So trading the trend, you look how much higher this one was, how much higher this one is. You expect the trend to stay pretty high if it wants to continue up. If you start rejecting down to here, you're likely going to bounce up and break down. If you want to be bullish on something, you want the price action to be bullish. You don't necessarily want to buy a deep retrace, even though those can work. It's just a back test of this area, and then maybe it goes up, but I'd wait for an uptrend to start out of there before buying it. But if I'm trying to buy a current drop, I want this leg to match this in log scale, which comes at 321 to 279. And 279 just happens to be that gap fill right there. And back testing the previous highs from whenever that was. There's a little high there above the gap, or right beneath the gap. But my invalidation for that leg is right at 233. I don't want to see price closing below 233. It can touch it and reject off of it. I don't want to see it hanging around down there though at all. I'd much rather it stay bullish, stay above 279. Below 279, I'm not going to like it as much. But definitely a clear line in the sand for me is 233. Back on the weekly chart, how does price get down to 233 and why? Definitely have a nice rejection wick there at the current high. So just like I do with all of my ideas on the wicks, I measure that wick. And I want 50% of that wick. Zoom into it and we'll mark it off. It's not giving it to me. Give it to me. There we go. 475. That is red. So as a day trader or somebody that's trading lower time frames, I mark that wick off on the weekly. And the concept that I'm giving here is the strong sellers versus the not so strong sellers. Anytime you have a wick, whether it be tops or bottoms, similar to down here, you had strong buyers at the bottom 50% and weaker buyers at the top 50%. So the same thing you're going to have here is strong sellers up there, weaker sellers here. Same thing you're going to have here. You could cut that in 50% of that. You'd probably have a buy set up at 362 to push up into the 475 area. And then from there, I'd expect it to reject down here if it is going to bounce up. Fill that gap if it's going to get down there. It may not. It may just get bought up from that wick and that's all you get. But it looks like you're building liquidity down here. So I would expect eventually that liquidity to get taken. But yeah, the concept of the 50% of all wicks have the strong market participants on the one side and the weaker ones on the other side of that 50% mark. So stronger sellers up towards the wick. That may have just been one player that exited everything, just market sold and pushed price down. And if price gets back up there, who's to say he doesn't have more supply to dump on the market and bring it down and fill this inefficiency in the chart? before maybe pushing back up. But if the market starts pushing below this weekly close, then it's likely just going to keep moving down, in my opinion. It would invalidate the buy setup for me. And we'll swing over to this chart. This is the 2x short MicroStrategies ETF, and that is a very large volume candle. 71 million in volume, 35 million, 35 million, 40 million, 35 million per candle. There's interest here. Somebody is interested in holding this ETF to short MSTR. It is diverging on the RSI. This is your third drive of divergence. Two drives of divergence. So it is strengthening. The trend is not as weak as it should be. So that's a bullish divergence happening. And it's getting, it's kind of holding above the bear zone. This may want to push up and perhaps fill that gap or that large gap. And that's a large gap all the way up to, what is it, 50? That's crazy. It's a very sharp rejection down into heavy volume. So seeing as there's interest here, you're likely to have interest. This may just kind of flag out here, sweep the lows, and start an uptrend out of there. We'll see. But yeah, that's the daily short on MSTR. Next chart I have is Bitcoin divided by MicroStrategy stock. Here on the daily chart, we are seeing divergence there as well, suggesting Bitcoin may strengthen against the MicroStrategy stock. I don't know how good the volume works on these comparisons, but if they do work, that's a very nice volume and spike rejection. If this starts an uptrend out of here, then Bitcoin should outperform MicroStrategies, in the coming weeks, something like that, maybe next month. Hop in that same chart out to the weekly. Bitcoin divided by MicroStrategy stock. We have divergence there as well. Unconfirmed divergence, but very high spike on volume. But the price action slash structure, to me, looks like a kind of a three-wave market cycle where liquidity is grabbed to the downside, to the upside, and back down to the downside. If this starts an uptrend out of here, then yeah, Bitcoin is going to massively outperform. As a trade setup goes, this is a very simple stop loss right there, because if you break below that, and your next target is like 66, something like that, because you would be repeating this leg. This is some kind of ABC, and you're going to repeat this ABC down here, down beyond 70, 66. So that would be my stop loss, because I wouldn't expect it to go down any further with that volume spike, but it certainly can. And if it stops me out, not that I'm trading this, but if it were to stop me out, it would. I would expect it to go down to 66, which means MicroStrategy would continue to outperform. You'd be getting down this area here. So maybe the trend since 2022 has been down on this, so it can certainly continue down and go real, like, parabolic down before bouncing back up. Who's to say? But yeah, I would definitely be watching this to say, where is the money going? If this starts closing above 320, 350 or something like that, then you're making higher highs from those highs, and you can start an uptrend. 368. If price is closing weekly candles above 368, I'd say the trend is likely reversing, and you're back inside this consolidation, and that should reverse, and you should take the highs from here. And like Elliott wave type thing, this would be like a wave 4, and you're looking for 5. So we'll round things back out to the MicroStrategy weekly chart. And we'll put this on linear scale. I mean, look at that move coming off. Very powerful move. Very large wick in the linear scale. Very large wick. So yeah, that does seem like a good sell setup at 475 to at least reduce some position size if you have some. 280 may be the buy setup, but when moves happen like this large of a move, and you see everybody's talking about it in the media, everybody's talking about it on Twitter, everybody wants to buy the dip, everybody's very interested. What usually happens, I mean, think of Bitcoin going to 74,000 back in March. People were very interested. Ooh, I'm going to get in this. I'm going to trade this. What happened? 6 months of sideways. So you may be consolidating up here for a while, or this is just halfway and the run is going to, hyperwave up to 1,000, 1,300, something like that, which would be the very extended targets. But like in a hyperwave, this would be phase one line, phase two, this is your phase three, and you've still got something even more vertical to go straight up. And it might look more like the NVIDIA chart, which this already kind of looks like the NVIDIA chart. But yeah, very nice performance out of this. And now that everybody's talking about it, that provides liquidity to trade it. Um, that's exit liquidity for some, and it piques the interest of others. So often what happens is some sideways chop or deep pullback, or it's seemingly deep. I mean, that'll scare some people out at 280. I'm guessing from 380 it drop down another $100. And but in linear scale, that would be the buy setup, or in log scale. Sorry, log scale doesn't look too bad. Just to match that leg there, bring it down there, fill the gap, see if something comes out of it. Stop loss is pretty close on that, unless if they gap it down over the weekend and trap traders in there. So if you do decide to trade this thing, be careful. He's Michael Saylor is basically selling volatility. But if that trade setup does play as a buy from that region and repeats these legs over the span of 2025, almost in its entirety, I mean, the target is like 1,500 bucks, 1,500. So that's possible as long as it keeps trending up. So I don't know. That's the way I'm looking at it. I'm not super interested in jumping in right here. I'd be interested at 280, and I'd be able to manage my risk off of that. The stop loss at 233. Yeah, and see if it does actually go to 1,500. But you'd expect this choppy stuff to happen the whole way up. So it might take a while, take all the way till summertime, which that's possible. But what comes after that, I think MicroStrategies has a target on their back. And if there are larger players that want Bitcoin, they know where to get it. And fairly easy to get it playing financial games, opening up massive short positions on the company, pushing the stock price down. Those convertible loan obligations, they I think if they go down to, or the company falls to like $50 or something like that, then MicroStrategy actually will be a forced seller of Bitcoin. So they could drop the price of the stock, drop the price of Bitcoin, and pick up Bitcoin on the cheap. And MicroStrategy would have to sell a fairly large portion of its holdings to cover those collateralized debt obligations that they have, the convertible debt notes, which are cash settled, or you have the option to get stock in the company. But if you have a falling stock price, all the customers are going to ask for cash. And in order to get cash, you have to sell some Bitcoin to get it. So I think in the end, Michael Saylor may be Bitcoin's worst enemy. At least that's the way he'll be painted. But he's kind of got a target on his back, and he's kind of setting himself up for it. So yeah, be careful what you wish for, and yeah, wish everyone luck with this one. Hope it works out. But yeah, something to watch for. Keep that stop tight. Have a good night.